Hi, big dogs. This is a little bit embarrassing. We presented a deal to the big dogs twice, and twice I forgot to hit the record button. So I apologize to all those that showed up, to my fellow co-sponsor big dogs, Sanjay Agarwal and Mike Bailey. Also, big dogs that are supporting us in this deal and are also partners on this deal, Janae, Amber, and Liz. I apologize that I did not record the exact call when you were here, and I'd like to start over again, and I'm going to give the presentation now so that everyone can hear it. So again, I apologize that you are not watching this as it happens. So I'd like to talk about Amberwood Apartment Homes. This is a 62 unit in Fort Worth, Texas. This is in conjunction with Massive Capital, of which all of those previously mentioned big dogs are part of Massive Capital, and our partners, Bakerson. So here is here is the disclaimer. I'm not going to leave this all up, but I want to make sure that you understand that we are not financial advisors, we are not accountants, we are not lawyers. All investments do have some risk, and you need to understand the risk, even if they are a passive investment. So the property we're going to talk about, as I said, is Amberwood Apartment Homes, 62 units in Fort Worth, Texas. First, I'm going to start off talking about our sponsorship team. So leading the sponsorship team on this is Sanjay Agarwal. Sanjay was actually one of the first big dogs I met when I joined, and I started passively investing with Sanjay almost 5 years ago, and we've had quite a journey together. At the very bottom of the screen, you will see fellow big dog Mike Bailey. He is part of the lead team at Massive Capital, and those two are the ones that are leading this deal. On the right-hand side, you will see myself. My title is Vice President Investor Engagement. We have Jen Brown, who's going to be the Junior Asset Manager under Sanjay. And then not big dogs, but fellow folks in Massive Capital that are huge are Jasmine and Maria. And then previously mentioned, we're supported on this deal by other big dogs. So Janae, Amber, and Liz. So you can reach out to any of us that are in the big dog community to find out more about this opportunity. We are joined on this deal with the co-sponsor, Bakerson. So at the top, you will see Bruce, and then underneath that is his son, Ben, and then their partner, Greg. On the right-hand side of the screen, you will see that they have extensive background in multifamily. You can see all the units here. And most importantly is this unit in Fort Worth, Texas. Becomes important a little bit later on because this property that we're talking about today is literally in the same neighborhood and will give us great economies of scale. I also want to talk about that Bruce and his son Ben have flipped 2,200 homes. And for those of you that are in the single family space can appreciate the amount of work that they've done. So I want to talk a little bit about the property. Amberwood Apartment Homes. It is 62 units located in Fort Worth, Texas. So the property, as I mentioned before, consists of 62 units. It was built in 1969, so it is an older but a very well-maintained property. The property is also at 100% occupancy and has been for some time. Let's talk a little bit more about this later, but this is an important opportunity for us. The average size of the units are 912 square feet. So you can see these are fairly sizable apartments. The average in-place rent is $963, and the average market rent renovated is $1,144. So you can see there's definitely some room for growth in the rent. What I had mentioned earlier is that the current owner has owned the property for quite a while, and he is what I'm going to refer to as a low resistance operator. He maintains the property on a good standard. He takes care of everything that is broken. He replaces everything that needs to be fixed, but he is not a value add operator. And a value add operator is what we plan to do on this property, where we will push the apartment complex. We will renovate the units. We will add some improvements to the exterior, and we will push the rents up to market rent, which is the big opportunity that we have in this property. So a little bit about where it's located. Amberwood Apartments is 32 miles west of downtown Dallas and 6 miles south of downtown Fort Worth. So you can see that it's very well located with several highways in the area that make it very convenient for our residents to be able to get to work and to get onto major interstates. Here's a little bit more of a area zoom. So this is where the subject property is. At the top, you'll see there's Cook Children's Health Center, TCU, Southwestern, University Village, the Cultural District, and another plaza here on the right. So you can see there are lots of tenants and things to do. This area is definitely an industrial area with lots of warehouses and workspace, which is actually perfect for our clientele base. This apartment is workforce housing, and there are a lot of jobs that are within this area. And as we all know, the general market of Greater Dallas and Fort Worth has seen great population growth, a lot of jobs coming to the area. And so we feel that this property is ideally suited for us to be able to take it to the next level. So I want to talk a little bit about projected returns. Remember, these are projected. So we are estimating an internal rate of return. This is an important one to understand. Internal rate of return is really the time use of your money of just over 17%. We're also saying that over the 5-year period, we will do a 1.95 multiple of your money. So just shy of doubling your money. On average, this property is going to produce just under a 7% cash on cash return. So this is going to be if you basically how much you got back on your cash. Want to make sure that you understand that this particular offering comes with a 7% preferred rate of return. I want to explain a little bit more about what this means. A 7% preferred rate of return means that investors are paid first. And until the investors get paid their full 7%, the general partnership sponsor team does not receive any proceeds of the property. Then on the proceeds of the property, they are split 70-30. So 70 cents of every dollar goes to the investors, while only 30 cents on every dollar goes to the sponsorship team. I do want to point out, though, that if we do achieve a greater than 17% internal rate of return, this splits to a 50-50. So a lot of people may think, okay, well, that's a little aggressive. But I want to point out, as a passive investor, and for those of you that don't know, I have passively invested in 20 syndications, and almost a third of those have been through the big dogs. You want to make sure that the investors, the sponsors, are aligned with the investors. So with us paying a 7% preferred rate of return, I want you to understand that you're getting the first amount of cash out of the property. And then we split the difference. But if we do very well, this split goes to a 50-50. So I want to make sure that you understand this really aligns the interests of the sponsors with the investors. So the investors get paid first, but if we do really, really well and we knock it out of the park and we're able to achieve a greater than 17% IRR, the sponsors will also do better. So this is a huge incentive for them to actually really work super hard to make sure that they give the investors the largest profit possible on this deal. I also want to mention that we're going to be doing a cost segregation study for this. For those of you that know about this product, this year we are at the 80% versus 100%, but it's still a great passive loss. So on typical, if you were to put the $100,000 in the deal, you will get approximately 50 to 75% of that in year one as depreciation. So for those of you that are looking for tax write-offs, tax losses, this is very, very good for you to be able to get. I also want to mention for the big dogs, while this project comes with a minimum of $100,000, we are able to do a lesser investment, as little as $50,000 for our big dog friends. And again, you're going to want to invest as much as you can. And I want to make sure that I'm also clear here that we take obviously cash. You can use your self-directed IRA, 401k, can all be invested in this particular project. I'm going to talk a little bit here on what we're going to say is our projected returns. So you can see here, this is a value add property. So on a value add property, it takes a while for us to build up and start producing cash flow. And the reason for this is the apartment is already 100% occupied. And what we have to do is we have to start moving some tenants out, start renovating some units so that we can grab the new market rent of the post-renovated apartments. And it takes us time to do this. You don't want to all of a sudden just try to kick all the tenants out. Clearly you can't because they have leases in place and things. And you want to maintain as high of an occupancy as you can while pushing the rents up. So on the original first year, if you put $100,000 in, you're going to receive about $2,500, which is just under 3% cash on cash return. Then as we start implementing the plan, you're going to see in year two that this is going to increase to a little bit more than 6%. And then once you get to year three, we're really moving along. Okay, so we've got all of the units renovated. We've got our RUBs in place, which I'm going to talk about a little bit later. And so we're starting now to produce some cash. And then in year four, you'll see it's even a little bit closer to 9% cash on cash. So this, you'll see that it grows very, very quickly until you reach it. Then we're going to sell the property. And so you're going to get your portion of the sale price plus the cash that you've already made. So this produces a total return of just a little over 195%, an average an IRR of just over 17%, an average cash on cash at just under 7%. Your annualized return is just over 19%. And your equity multiple is about 1.95%, so just under doubling your money in our estimated 5-year hold. So I'll talk a little bit about the business plan. So obviously we get the property in the first 0 to 6 months. We integrate the new property management company. Now I want to talk a little bit about the property management company. 62 units is an odd size. And it's a challenge sometimes for you to find good property management. As I mentioned previously, our partners have 150-something unit just a mile or so away from our property. So the plan here is that we're going to be sharing management services. And this becomes very powerful because a unit of 62 or apartment complex of 62 units would really struggle to have a full-time leasing agent and a full-time maintenance person. So we can share these costs and keep the costs down. We plan to do complete exterior renovations. So one of the things we want to do, even though this is a well-maintained property, we want to spend some money at the beginning on the exterior of the property so that people that live in the neighborhood, drive by, start to see that we're improving it. Then we'll start the interior renovations and upgrading on turns. So as a tenant leaves, we're going to first try to just get some rent increase out of them, get closer to market. And then if they can't afford to be able to stay, we're going to turn the unit, we're going to renovate it. And again, I want to make sure that I point out, this is not a deep value add plan. It's just a value add plan. So we're not going to have to tear any units down to the studs. This is purely fixing up kitchens, bathrooms, floor, and fresh paint. And then when we do these, we're able to adjust the rents to the market. So in the next 6 to 12 months, we're obviously continuing this plan. You have to remember, when we take over, some tenants will be in there just signing leases not too long ago. So it's going to take a while. Then we're going to start giving out investor returns around month 9. And then our goal at this point is to implement RUBs. RUBS gives us a utility bill back system. So our goal is, this is an all bills paid property at the moment, is to first fix up the property, get the rents in line, and then start billing back some of the costs, such as our electricity, sewage, water, and trash collection. And then obviously, as we get going in the 12 to 24 months, so we've had the property now for a year, and this is rolling into second year, we're going to continue renovating units. Okay, it's going to take, as I mentioned, with 100% occupancy, it's going to take a while. And then we're going to implement just our annual regular increases to the property. 12 to 36 months, all of the units have been rehabbed. All of our scope of renovation has been completed. We've initiated all of the RUBS and everything. And our goal is to reassess the property and see at this point in time if we can put in a supplemental loan. We have not put the supplemental loan into any of the projections, but we wanted to mention that this is something that we're hoping to be able to do. And if we can do it, this will be a great opportunity for us to be able to return some of the investor capital while still keeping you invested in the deal. And then from 36 months forward, it's basically running the property as well as we can. We're going to maximize rent increases. We're going to improve efficiency. But then again, the property's up and running really well. So we should be able to reduce the amount of maintenance that's required to keep the property. But again, I don't want to deceive you. This is a 1960s property, and maintenance will always be an issue for us, but we feel very capable that we're able to handle this. Also forgot to mention earlier that Sanjay is our asset manager for this. So we are the asset management side of the partnership. So we are responsible to make sure that these operate. And those of you that know Sanjay know that he's very skilled in this area, and he's being helped with Jen. So talk a little bit about the story behind the numbers. This is a pocket listing. This particular apartment was not listed for general sale. This actually came from the broker from our partners who had bought the neighboring property and brought them this opportunity. This is a known location. Again, I mentioned our partners have another property just up the street, and they're on track implementing their plan there. And I also want to make sure that I mention Sanjay owns several single family homes in this area and has done very well. Also want to talk about the price point. We all know that there's a little bit of pressure with things happening in the marketplace and that. So this property was initially listed at $6.2 million, and we were able to buy it at $5.5 million. So you can see that's a significant difference for when they first looked at it. The historical operation, as we mentioned, this property has maintained close to 100% occupancy, even through COVID, with great collections. We have a motivated seller. They're ready to move on. They would like to get out of this deal and move on. And I also want to make sure that I mention that the Bakersfield have a proven track record. We listed earlier all of the apartment complexes that they have under their belt, along with massive capital. We've been very successful in this space, and we've had several properties in the Dallas area already. Why invest in this deal? Okay, number one, it's a strong asset from day one. Even though it's a value add, it's very rare for you to find a value add property that's not a deep value add, that has 100% occupancy, which produces the next one, a solid upside. So you already have a strong tenant base, a neat and tidy property that is ready and primed for us to come into it, to apply some solid business practices and increase the overall rental baseline. Talk about low leverage. This is a very important thing right now, that this property is under 60%, 59% loan to cost. This is very good. All of the properties that you're going to hear about in the news and different things, they've gotten into trouble because they're highly leveraged. So in this property, we have great leverage. Also want to talk about the fact that we all know interest rates have gone crazy, right? We went from really low interest rates to really high interest rates. This particular property comes with fixed federally backed loan at 5.45% for 7 years. So this is a fixed rate. Our interest rate cannot go up. Also want to talk about the attractive purchase price. I spent probably 2-3 years trying to find a property myself, and I worked with Sanjay in a few deals in the Fort Worth market. And all of the deals that we looked at were more than $100,000 per door. And in fact, on average, they're $120,000 to $140,000 per door. I want to make sure that you know that we got this property for $88,710 a unit. This is an incredible price. We're super excited, and that's what brings a lot of value to our investors. And we have a conservative exit strategy. We have estimated our cap rate to be 5.5%, and we have stress tested the underwriting to 6%. I want to talk a little bit about the CapEx. I'm not going to spend a lot of energy on CapEx. I just want to give you an idea that on the units, okay, we're talking about $3,800 for a studio and $6,600 for a 3-bedroom, 1.5 bath. So as I mentioned earlier, this is not a deep value add, but we clearly need to upgrade the apartments. We clearly need to do some work in the kitchens and in the bathrooms. We need to put in some fresh flooring and repaint the particular properties. Now, we did mention earlier that the property is a little tired, well maintained, but tired. It needs some refreshing on the exterior. So almost 50% of our CapEx budget is on the exterior, and you'll see a bigger detail of it down here. I'm not going to take the time right now. And then we also have $50,000 contingency. We all know that you're going to find something that is wrong. I do want to address at this point in time too, that everything has been inspected. We have walked every single unit. We have had roofing companies come and look at the roofs, and we are aware that 2 buildings will have some roofing issues that we need to take care of, and they're listed in the budget. We have scoped the plumbing lines, looked at all of the electricity. Everything is in really, as I mentioned before, it is a well-maintained, but it is an older asset. So I want to talk a little bit about our business plan, okay? We're going to raise the rents and introduce RUBS. So we're not going to do these at the same time. What we don't want to do is shock the system. So we're going to renovate units on turns. And then once we get majority of the property renovated, our goal is to add RUBS. We're going to do about 20 to 30% of the interior units. As I mentioned earlier, we're going to do all the exterior and add some amenities. And more importantly, property management is going to be huge here. Again, I want to stress that Sanjay is based in Dallas and he is our lead asset manager. We have Jen, who has joined the massive team as a junior asset manager. We have a property management company that already manages the property in the area. We have a partner who already has a apartment complex just up the street from this property. So there's a lot of things that we can do to be able to drive the efficiencies and the quality of this operation. So I want to talk a little bit about it here. So what do you do next? Okay, I'm going to give you a scan that you can look at it. So you need to review all of the private placement memorandum, all of the subscriptions. So it's going to take you a little bit of time to review this. We want you to wire your funds as quickly as possible. This is a first come, first served deal. We need the funds by April the 24th to be sure that we can close on time. As I mentioned earlier, the normal minimum is $100K, but we can do less for our big dog friends. So please reach out to one of your big dog associates for it. We obviously accept IRA funds, solo 401Ks, and QRPs. So if you have any of those investment vehicles, we can do it. Inside there, you're going to find all of the documents, the PPM, the subscription and operating agreements. And as I've already mentioned, this is a first come, first served opportunity. So if you're ready to invest, you can quickly scan this URL code and it's going to take you to where you can register to invest. I will also reach out to Sanjay, Mike, myself, Janae, Amber, and Liz, we would all be more than willing to help you to be able to invest in this particular opportunity. We are super excited to be able to bring this to the big dogs. And again, I want to apologize that I forgot to hit the record button. Totally my fault. David was at a workshop and left me in charge, and unfortunately, I dropped the ball. But I'm glad that I could record this for you. Please reach out to me. You'll get my contact information, Sanjay, Mike, or as I mentioned, Amber, Janae, and Liz. We're all fellow big dogs that would like to bring you as partners, as passive investors in Amberwood Apartments. Thank you so much for your time. Please reach out to us.